Hi everyone, welcome to the Next Level Finance podcast. As always, we got a special guest on Series 2, Episode 5, and it's Ismael who's going to give us some beautiful tax savings. Ismael, thank you.
No, thank you, Zee, for having me. I appreciate it. I appreciate it, Zee.
And we're going to have all the fun coming up. He's going to give us some insights that Rachel Rees hasn't taken at the moment, and hope that long may that continue, and hope she's not watching for once. Ismael, thank you for coming down. We're obviously looking forward to this because there's so much expertise these days and people don't realise that you need, especially us being an accounts tax lawyer, you have to work with a number of specialists, 100%. Especially to help property entrepreneurs, because this Correct. Is our focus, and trading businesses, because a lot of people do both these days.
Exactly, Zee.
And your area, which you've got 10 years expertise plus a decade. Forget the 10.
See, I know I don't look like it, but it is a decade. It is a decade.
I love it. And yeah, he's got decade over decade experience, and it's the knowledge that people don't realise that you have to do. And the key areas, can you tell the audience the key areas that you're going to be covering for us today?
Thank you so much, Zee. So the key areas in terms of what we're going to be talking about and educating and really adding value to this wonderful podcast, Zee, is all about research and development, tax relief, and also land remediation tax relief, which a lot of people doesn't necessarily know about. However, that's the reason why we started the company, to really educate and let people know exactly what is out there and how they can really even add money back into their company and really add value and let their company really see the heights of where they need to go.
I love how he said that. His company see the heights.
See the heights.
And he dropped it in. I love it. And the one that a lot of people probably don't know, we'll get about R&D, is land remediation relief, right? Just for the obvious, if I was average Joe and I'm watching this and I'm like, what is that? How do I benefit from a property entrepreneur?
No
what does it do? Just a quick summary for that so people know what it is.
No worries. So essentially the government put this incentive in place, land remediation relief, probably to the early 2000s to really help either property...
Wow, it's been that long.
It's been that long. Wow. To help really property owners, investors, developers, as well as limited companies really bring back derelict land to a reusable state. So if it's contaminated with Japanese knotweed, asbestos, what they've said is all the money which you've spent to actually bring that piece of land or the building into a reusable state, you can actually get tax relief from that. So you can, if you're loss making, you can get money straight back into your pocket. And if you're profit making, you can get a corporation tax refund or corporation tax reduction.
I love it. And a key point there, you have to be a limited company to claim this relief.
Correct.
You can't be like a partnership to claim this. What about LLPs? Are they excluded as well? Or?
Yeah. So you have to, property owners, investors, and have to have a limited company.
Yeah. So for all those businesses that made into business limited companies, this is for you, and you're going to get huge value. So before we get onto that fun, we want to learn about Ish, because it's all about people and relationship. We're
Correct, Zee.
Hope you enjoyed the food and all the rest of it.
As always, food is 10-10. Always 10-10, Zee, and thank you for the hospitality.
Oh, no problem. We're really thankful that you came down to speak to us about this stuff. I want to speak, when I have entrepreneurs, I always want to understand a bit about them, right? And everybody we meet, they've had such amazing stories, and we're so humbled that they've come to the office and having this podcast with us. We're going to talk about some of your personal challenges, right? Because everyone just sees the end point. They don't see what's taken the person to get there.
Correct.
And one of the things that you mentioned, which I was surprised by the way, because I've shared a stage with Ismael, is public speaking. You said you struggled with that. Tell us a bit more about that.
I struggled with public speaking, kind of getting into business and probably my personal endeavours. Probably at the beginning of my career, my dad, my late dad, absolute legend, was an...
Deepest condolences.
Thank you, my brother. He was an absolute legend at public speaking, could control a crowd with his cadence, his tone of voice. However, I found when I was speaking, I would either speak too fast, too quickly, because I was just nervous. Yeah. When I was in a business environment, when I was actually in my placement, I realised that this was a major issue for me, and I know that if I'm going to not necessarily survive, but thrive in a business environment, you have to be able to communicate and public speak effectively. So I made it my mission to put myself in public speaking positions deliberately to make me actually get better. So it was an ongoing process, and it's still an ongoing process. Because I think in terms to be an effective communicator, you still need to be working on it each and every day.
So you've gone out your way. Public speaking for everybody is quite challenging. It doesn't matter who you are. You constantly have to work on it. So the key steps you did for the audience is that you identified it as a problem.
Correct.
You then went out your way to actually experiment to see how you come across,
100%.
and then took feedback and then improved from there. Is that
exactly what I've done? And it's still even something to even better myself now. I made myself a president of my networking group. So I have to be speaking 2 hours every single week and leading the meeting. So I was like, how am I going to actually take this to the next step?
Wow.
So,
do you know, it's such a huge thing, and people just, do you know what, if people don't think, then people are not naturals at it. Everyone thinks, oh, you have to be a natural.
No.
You're not. It's down to how you take on the challenge, and people who take the challenge, they can take it to the next level. I'm
Correct.
sure good old Donald J has done that when we talk a bit about if we get time. The other thing I wanted to talk to you about is many people I've met who've gone from the corporate world, because a lot of people started in the corporate world.
Correct.
And they've become gone into obviously their own business.
Yeah.
How did you find that transition? Because the audience always want to know this.
do you know the corporate environment transition into a business world? It's totally dependent on how you really want to run your business.
Yeah.
The corporate world was amazing, and it done me really, really well in terms of the skills that I've learned. However, leading on to the later part of the corporate world, it was very, very rigid.
Yeah.
It's like a one-size-fits-all model. You know me, Zee, I love a chinwag. I love to talk. I love to get to know people, understand their journey. And I feel that's one of my unique selling points is I can build relationships really, really quickly. However, in certain corporate environments, because you're so rigid, you can't necessarily express yourself or speak to the clients the way you would like to. So in order to kind of make that transition, I had to think to myself, how do I really want my business to run? And what are the ethos and principles that I really want to kind of take on? So it was kind of saying, all right, this is great in terms of the thing which I've learned, but I actually really want to do business in a different way. And I think there is a good way to do business by actually finding out, okay, Zee, me and you're sitting here, but we could be speaking for 2 hours off camera. And that's building that personal relationship, because I could, let's say, for instance, let's say if you're a manufacturing company or a property developer, that's me speaking to you on a level, and as a whole, you're more likely to do business with me than someone speaking, not necessarily like a robot, but in a very strict and a very A and B conversation.
I think you made some really great points, and I hope the audience are getting is that when you're in a corporate world, the innovation is stifled. And it's a bit of a cliche, but it's true, because they have a very rigid system because they're trying to get maximum efficiency. They don't realize the relationships actually are the long-term winners.
100%.
And the organizations that can actually factor that in and give scope for creativity, they're the ones that are different. But that sort of gets beaten out of you when you're in corporate world. And that's why I find a lot of people, when they make that transition from corporate to running their own business, the ones that are successful actually are looking forward to having that risk and the creativity.
Correct.
And the ones that don't make it, they go back to employment because they're so used to being told what to do and be in a process.
Yeah.
Do you find that as well?
100%. I feel like the personal relationship which I have built over the past 4 years in business has allowed me to transition and grow my business.
Yeah.
Now, if I wasn't as personable, as relatable, having the right conversations and finding out who that person really is and having a conversation rather than it just being, let's say I'm having a conversation with Max, rather than having a conversation with Max, but actually find out who Max is on a Saturday evening, obviously not too far left, but find out who Max is on a Saturday evening and actually relating on that level, maybe my business wouldn't have been the way it is now.
I think you make a huge statement there, because I think people, when they start thinking like this, is all about relationships.
Correct.
And it leads us nicely onto some of the business challenges you had, because on the flip side, you have to be personable and creative. But one of the issues is when you're trying to scale a business, you do need systems and processes.
Correct.
And you've obviously said that's one of the big learning curves you had to help scale the business. So how did you get that balance right for you and for your business? And what timescales did you do that in?
See, initially, I didn't have that.
Yeah.
I didn't have that. It was also a learning process. So in terms of finding the right people to speak with, the right coach, people who've actually been there and proven themselves, because sometimes you could be in business but then have an employee mindset. So you could think, okay, great, I want to get bigger or want to scale, but you're thinking of it in terms of, okay, I need to do this, I need to do that. However, once you build a team around you who've got the right skills, people can actually take different roles who actually may even be even better than you in certain roles. It allows you to then grow and have that right system and process in place. And then also in terms of, from a system and process point of view, how does your company look? How does it run? How does the functions run? How does everything run smoothly from A all the way down to Z? How does that look like from a client perspective? Okay, we're getting there, or you haven't got it. But then let's say, for instance, someone is sick today. Can someone come in directly right now and deliver that client process from A to Z? If not, you haven't got a clear system and a clear process. If you've got something which is documented as to how this should be run, how this function should be run, how that function should be run, then you're kind of building in a system and a process. Now, when you've got something like that, the business can actually run without you being there, essentially.
I think you put it in a nutshell about sustainability and scalability.
Correct.
I think a lot of people find that really hard, and they don't really understand that's key. And if they don't do it, you're not going to get a successful business.
No.
I think the scalability and learning how to do it, and you mentioned coaching. I think coaching is so important
100%.
for people, because what you don't know,
you don't know.
And you need to invest in that. A lot of people think they can skip that. I think you've got to invest in coaches, especially as you're scaling and you're going from one part of your business to another as the turnover changes and complexity, if you want to get higher profitability and have a sustainable business.
And Zee, you're totally right, because there's people who have gone there before you. And like you said, you don't know what you don't know. But it's always good to kind of understand what you don't know, grab that with both hands, grab the knowledge and say, okay, now I know this. How can I take this to help me grow to reach X?
I think that's great insight. I think the other thing that, and people running businesses really struggle, and it's the bugbear of so many businesses.
I know what you're going to say, Zee.
Finding new clients, growing it. How have you contended that challenge? Because obviously you've been successful to scale your business, right?
Correct, yeah.
How have you done, what steps have you done that you're happy to share with your audience, something for them to point?
I'm not going to give you all my tips and tricks, but I'll give you a high level. And we'll speak about this offline, Zee. In terms of me finding out my skill set, and me knowing, like I said to you, like I love a chin wag, but a strategic chin wag. So it's building those relationships, a lot of networking, a lot of networking in terms of what I've done. Joining networks, proactive marketing, lead generation, all of these things, and leveraging off different relationships and partnerships. So it's not, I can't necessarily say there's only one thing, but there's going to be quite a lot of different things which I've done in my pot to help it grow in terms of finding new clients. At the beginning, was it challenging? Yes, it was challenging. But the more, like I said, you speak to different people, you understand the power of building relationships. And some people think, okay, I speak to someone once for 30 minutes. Okay, then you expect to get business. But that's not how it works.
It doesn't work. So I guess the tips I'm getting from this is obviously network building.
Correct.
I think you said you've done some marketing techniques as well,
Correct.
which everyone should be thinking about. But I guess at the early days, to get this first start of business, networking is quite good, because you can build those face-to-face, get some revenue in. That gives you opportunities to do other things.
Correct.
And I think people find that balance. They don't realise the stages, unless you've got loads of startup money, which many people don't. It takes, it's hard.
You've got to put in the work. You've got to put in the work. And do you know what? Even at that point, the infancy in business, you're trading your time for money. You're always doing that anyway. But even more so, the networking, because it's front loaded and it's heavy because you're doing it all yourself. What we found is, once you're farming and you're going out to try and find those clients, as you're farming, you're not delivering clients. But if I'm delivering the client, I'm not farming.
Yeah.
So it's like the chicken and egg, But once you get past that, then,
It's down to systems and people, right?
Correct.
It says easier said than done, because there's a constant challenge. I want to talk about, which we love talking about, successes. And I know the audience love talking about this. You won an award recently. I've seen it on the old socials, LinkedIn especially.
Yeah.
Tell us a bit about the award that you won.
So we won the best business growth for action coach in Essex. This was over like a 3-month period where we literally doubled our revenue.
Wow.
And then we also won Best Culture Award for the quarter in Essex as well, in Action Coach. And I think it's just, the reason why we won those awards was kind of just listening to your coach and people who come before you, as well as putting the time and the effort in, because someone could tell you something all day, every day. If you're not literally implementing those and actually beating on your craft, you're not necessarily going to get there. What I realized is even the best business growth, it doesn't necessarily come from doing the biggest things all the time. It's just about doing the small things constantly, each and every day. It does start to compound. Like I know in terms of, I might as well touch on it anyway. So my dad passed away, unfortunately, in June, but he got found terminal cancer from March and then passed away in June, and then the funeral in July. So like, this year has been so challenging. I didn't say that was one of my challenges, but that's probably been one of the biggest challenging things in my life, personally. But then I also had to still run the business. It's not going to run itself. It takes like so much strength. Because some people, and as my dad would say, everyone's bearing a cross that no one can see. So everyone in business and personal, everyone's going through certain things in life. But when those things do happen now, are you going to stop putting those little things in place each and every single day and making compound interest to growth? Or are you going to let those situations say, okay, this has happened, let me take 3 months off, 4 months off. Some people do it, and no discredit to you, everyone deals with grief and things differently, but I think I'll be doing myself and I'll be doing my dad a disservice if I didn't carry on and put one foot in front of the other, you know? Even as hard as it is.
I think you've raised a really important point. A lot of people don't realise we are people. It's not name and number like we're in the corporate world, right?
100%.
Right, and people have these important events happen. You know, I mentioned to you, my dad passed when I was quite young. You obviously reacted differently depending on your responsibilities, but
Correct.
It's so important that you need that time and you need to find ways that work for you. Right?
Correct.
Because you need to give time to that, because there'll be loads of people grieving.
Correct.
But unfortunately, in life, we don't get time, a lot of times, to reflect.
No.
We have to deal with so much. And, you know, you still got to pay the bills and do all this stuff. So it's getting that balance right to be able to deal with it, be strong, and still have the time to grieve.
100%.
It is not easy. And
the tax man is still going to be there at your door, Zee. He's still going to be there at your door.
We'll talk about the tax stuff later. Oh my days. Shocker budget. Anyway, and I think this is the thing, because we've got bills and a lot of things to pay, and I think a lot of people don't realise. So you've done really well to get that balance right. Hi everyone, sorry to interrupt the podcast. Hope you're getting a huge amount of value from this. Just going to be quick, 2 seconds. First of all, to let you know, in the comments below, we have got links to free business guides that can help you on your entrepreneur journey. They include exclusive footage from Sky TV episodes that I've done, and a whole load of other content in there, whether you're a growing business, property investor, property developer, or if you want to love the fun of SaaS pensions. Please do look at those, and if you still want more help, get in touch. The contact details are below. I hope you enjoy the podcast. I think the other thing you mentioned, which is a big pat on the back and something you've got to praise, you built a team of 9 team members now in how many years?
In 4 years.
What? That's amazing, by the way. So you got a team of 9, you rent a few offices. Tell me why that was a dream when you started.
That was a dream because I remember being in a corporate environment saying to myself, one day I'm going to have a company, I'm going to have... I won't say people work with me, but just a wonderful team who works cohesively together to, let's say, we're going to reach a certain goal. But it was always something in my head that I always wanted to achieve and always wanted to do. And this was probably even coming from, let's say, like 7, 8 years ago. And that was something like I used to dream about, manifest, and I'm saying, this is what's going to happen. I used to actually even vividly say, this is what it's going to be like, this is what office is going to be like, and so forth. So to say, let's say, 6, 7 years later, it is actually coming to fruition, it's absolute dream coming true, because sometimes even though where I'm at now, I'm still looking, let's say 5 years ahead and saying, okay, this is what I want to achieve in 5 years or whatever. But then don't forget about the dreams you once prayed for when you're here. But that's been an absolute dream come true, that I'm sitting here right now and saying, Zee, do you know what? We've grown a team to, let's say, 9. And that, I'll be honest, Zee, that's come probably within the last 2 years.
Wow.
So it's like, it's been aggressive in kind of recruiting, but it's all part of, like I said before, putting those systems in place to ensure that I can accommodate for the growth and all of the clients which are coming.
I think also the relationships that you build, back to what the concept, which is a famous networking, always going about farming concept, but it's true.
Correct.
If your relationships, and to all the entrepreneurs watching out, is all about me, and give me business, it ain't going to work. It's about helping others, building those relationships, and then business comes from there.
And see, like you always say, is the adding value.
Huge.
How are you really going to add value? Because like you said, it's always people, what can you give me, but how can you add really value to someone else?
Huge. And we're going to get on to how you add value is huge. I think one of the other big successes, which I think is another one that people don't shout about, it is a family business.
Correct.
Tell me when you really hit home about the family aspect.
It really hit home because me and my fiance, soon to be wife, she's on probation. She wasn't going to like me to say that. But in terms of when we started the business together. However, she was on maternity leave. But because of the situation, I kind of jumped ship and I said, all right, I've only got a certain amount of months to make it work. And I was like, I have to make it work. So I literally put my head down, grafted, a lot of networking, and just kind of doing 18-hour days. Like, when you first start business, you've got to.
Does it stop?
No.
You still up those days?
I had it yesterday. Wow. I had it yesterday.
I had this, I was in Dubai recently, and still having to manage stuff, meet client, potential opportunities, and manage a business.
Yeah.
Back here in the UK.
But no one sees that, do they, Zee?
No, they just see the glossy pictures and all the rest of it. I think one of the things that a lot of people, entrepreneurs, want to think about is approach. So if I look at you, what's one of the things that you can share with the audience around what's your approach? If you name like one of the things, you mentioned relationships. You touched on it before. How do you do that approach, and what helps facilitate and make those relationships strong?
I think for me personally, it's relying on my own self in terms of how do I deal with people, the way you communicate, the way you carry yourself as a person, and also your knowledge and how you can add value to someone. So you can be a good talker, but then you have to walk the walk in terms of what you're saying, right? So building really strategic relationships, long relationships, and personal relationships with people, as well as my industry knowledge and how I can actually really help you. Maybe not now, maybe in the future, or maybe I'm just helping you now in terms of navigating what you need to do before you make a land remediation claim or an R&D claim. Okay, maybe, and this is just basically giving you some free knowledge in terms of this is how you should actually set up your accounts, this is how you should set up your company or payroll or do this or do that to be tax efficient. So when we actually do come, it's going to be a lot simpler process,
I think you've really put in, I mean, one of the things is it's being personable, but backing it up with the knowledge. So people like, do you know what, this is the person to go to.
Correct.
So for me, one of the things when we look at some of the releases, we're going to go in detail, clearly you know your stuff, and we've done presentations together and done a lot of things.
Yeah.
I think it's huge. It's huge. I think one of the other things, a little shout out, is you're building key introducers to you, our accountants. Obviously, not as good as us, but I guess that's so important that you've gone and you've built that relationship, because accountants are always not easy people to build relationships with. So
I'm not going to say that, Zee. I'm not going to try to get me in trouble.
I've been there. I'll be honest with you, because from a accountant tax advisor perspective who run practices, we have a lot of demands on our time as well. We're trying to help people, and we can only be specialists in certain areas. Can't be special in everything, so you have to have collaboration. But as soon as you refer someone, if they don't deliver or do things, it looks bad on you, and you lose a custom life cycle of many years, and that's happened. So if you introduce the wrong person,
true.
That's why I think accountants are a bit challenging, because they've got to be careful, because it's their name on that relationship.
100%, Zee. And I think from even an R&D and land remediation relief provider, you've got to understand in terms of how you are as an accountant and accountancy practice, okay? What I may be asking you to do and help me with in terms of clients, that may be not the top of your priority or your agenda, because you've got VATs, corporation tax, monthly year ends, so much things that you need to do. and I'm asking you to kind of help and how we can actually work together. So it's one, understanding who your client is and who your partner is essentially, how you can actually help them, and actually speaking from experience, because I used to work in accountancy practice myself, so I've seen it in-house now, actually how to communicate with someone in that kind of environment. And then also just, like I said, having a personal approach in terms of knowing exactly what each other wants, what's each other's drivers, because one accountancy practice driver may be another person's demise. So if you say, all right, well, you cannot have to have a serious conversation in terms of where are you going as a practice, what are you looking for, how can I add value to your clients? So someone may say you can add value by giving R&D. So there's no point me going, I can do land remediation. And then the other client, if they say, well, it's going to be land remediation, I can't be going, well, I can do R&D. You have to be able to listen, understand how you can add value to that client base. And then also just nurture it, make sure you do what you say you're going to do.
I think summarising it, there's a lot of assets. It's about collaborations. Both of you have certain aspects, certain expertise. You work together much stronger because you can then offer a variety of services. And most accountants, from putting an accountant tax advisor hat on, is they want their client taken care of and end-to-end.
Correct.
So they can give them the beauty of everything without having to be specialist in everything. You know, we specialise here in property tax quite a lot, just a little bit I should say, but you can't do everything. So we have certain specialists that we have collaborations that help us do all the different facilities of different things, because property in itself is huge, just like trading businesses are huge. And there's huge things, and we're going to get onto that. One of the things that we talked about, adding value. So I know the audience have been looking at this part, and we're going to get into it deep onto this, right? One of the bits is people probably don't understand always what land remediation relief is. So Ishi's going to give us some examples of between what you can save, and it's quite a bit of a range from 50 to 150%.
Correct.
Right? Could you explain what the variation from 50 to 150% of cost incurred?
No worries.
Give an example. I think if you incur 100 grand's worth of cost, that means you could get a tax credit of either 50,000 or 150.
100%.
What varies and how does that look like?
So it varies in terms if you're an occupier, if you're a property investor or property developer. So if you're an occupier or property investor, it's probably around 150% of the cost, which is probably equates to around 28.5% of the total qualifying expenditure.
Wow. So give an example. If I got a property portfolio and I found I've got, and we're going to example, loads of asbestos in there. Right? As an investor, and I've got it in a limited company, even if it's residential or commercial, if asbestos is there and I have to spend 100 grand, let's say, to fix it, I could get 150 grand tax credit.
Not necessarily, 150%, so you kind of have an uplift. I'm not going to bore you with the calculations, but actually in terms of the qualifying expenditure, probably just shy of around 30% of the actual expenditure you can actually claim back from the benefit essentially. So probably around 20 to 30 grand.
Oh, that's the money that you end up getting.
Correct,
but
yes.
I'm looking at the liability. So if I've incurred 100,000 cost, that 150% just for the audience is the actual cost.
That's correct.
As a thing.
That's
You're
correct.
looking at issues a couple of steps ahead. He's looking
I'm
at the
calculating
benefit.
the benefit.
He's looking at what you get in your pocket. So if I got 100 grand's worth of cost, he's saying you get 28,000 back.
Correct.
Right? As in the money.
Correct.
Right? But the actual, from a tax perspective, we do it on the liability. Right?
Okay.
So you're getting 150% credit, and then it works out on the... Yeah, so... Don't you love it? All right, so it can actually be hugely beneficial.
Hugely beneficial.
Right, it's actually higher now, if you think about it, because we're getting now technical here. So if I use that example, 100,000 and you got 150,000, it could actually be 26.5% because the marginal rate of corporation tax is no longer just 19%.
It's gone up.
So he was basing it on 19%.
Correct.
And if you work numbers, it does stack up to that.
Yeah.
Right. So it can actually be quite a lot more,
100%.
Depending, and that's a huge benefit, isn't it?
Do you know, it is a huge benefit, and I think a lot of property investors, property developers don't necessarily know about this relief.
They don't. Hence why I got you on it.
100%, Zee. And I'd like to kind of even touch on in terms of like what considered as contamination. So it's contamination to human health. It could be to animals. It could be to the ground, the soil. whether that be things such as Japanese knotweed, which actually grows at a vast rate, and you kind of literally have to put different either pesticides, or if you're going to dig up the ground.
Costly, and it's scary, isn't
Very,
it?
very.
Looking at some of the, let's look at a couple of examples. People love this. So there's an example that you were saying, can you believe it? Now the big headline numbers that you did an asbestos, that's land remediation.
Correct.
Is the benefit when you clear asbestos off, and R&D in the same one, and I think you said you saved
about £120,000 for one of my clients.
Is that in their pocket, 120,000?
£120,000.
Wow. So
in their pocket.
Think about the liability. That's quite big. That's probably in my head thinking there's quite a big liability there.
There is.
That's looking like probably 400 grand's worth of liability. Oh, wow.
And see, this all came about in terms of a client being presented to ourselves in terms
Were
of...
they investor or developer?
A developer.
A developer,
But
okay.
as they were loss making, they can actually claim up to 24% because they're loss making.
As this is actually cash back.
Cash back as a tax credit.
So what Ishi's talking about, there's two types. There's actually you get a credit if you're making profit, that reduces your corporation tax, and that's what we were talking about earlier. But you can elect if you're making a loss, because obviously you've got no tax to pay.
Correct.
You can get rid of that loss, surrender it as they call it, and claim back
a tax credit.
Wow, just like an R&D.
R&D, correct,
yeah.
So I think that was the first case in terms of a loss-making client, because we usually get profit-making clients anyway. But what happened was, I can't go too deep into in terms of their case, but it was, they bought probably about nearly 2 acres of land, and it was littered with asbestos all over the ground as well as the buildings.
Wow.
It was dog kennels, and they wanted to change it to single and multiple dwellings. So when it got brought to me, straight away I was like, this is research and development.
Yeah.
I'll kind of go into research and development in terms of what that is later, but I said, wow, this is research and development. And they said, Ish, I'm not too sure. Let's kind of stick on the land remediation. So I said, okay, no worries. If it's safe for you and this is exactly where you want to go, I'm not going to force anything. Let's kind of go with land remediation, because obviously asbestos, 20 years ago, or maybe 30 years ago, there was kind of like asbestos cladding and things and so forth, which was put in houses as a good thing, but now it's going to be a contamination to human health. So they had to kind of get rid of all of that. So they employed a lot of demolition companies, a lot of surveyors to actually test the property and so forth, test the ground. All of those costs, we can help them claim on a portion back of it. So all of their staff costs, all of the time that they used to book the demolition companies, actually the managers who are actually on site and helping the individuals, we claim an apportionment of their time back.
So one point, just a little rewind, difference between investor and developer. I assume this is the tax definition, right? So property developer, they're developing the land, build a property and selling it. So they have to be clear in their intentions based on the SIC code. If they actually were holding it, they would get even bigger benefit
100%.
Because they'd be an investor.
100%.
See what Zee goes on about, right? So they claimed the land and remediation.
Yeah.
You did all of that. How did you claim the R&D part, or research and development? That's what we call R&D tax credit.
Yeah, R&D tax credit. So for those who don't know what R&D tax credit is, it's an incentive which the government have put in place to really help UK limited, it has to be limited companies anyway, to keep on creating and doing innovation within the UK. So it was an innovation in terms of construction. So to be eligible, you have to have or fit 2 criteria. The first one is it has to be a technical advance in the field. Basically, it has to be an advance in construction, or property development, which is basically construction. Then it has to be technologically uncertain, basically meaning it has to be challenging in nature how to actually achieve what you're trying to do. So for example, if you're trying to create, let's say, I don't want to kind of go too much into the case, but because it's IP and stuff like that. But in terms of what they were doing, it's very bespoke. If I could find an answer to kind of create that on Google, that's not necessarily going to be challenging. If you had to have different prototypes, meet up with structural engineers, have different meetings, and actually different drawings on how you're actually going to achieve that, and there's no definitive answer, that's R&D.
The way I look at it, and you probably correct me because you're more expertise in this, is if I can't get it off the shelf.
Correct, but it can't be routine work. It has to be above and beyond.
Yeah, and that's where they've been challenging HMRC, because this area you have to be very careful and make sure it meets the criteria, because unfortunately we had a number of people abuse it.
Yeah.
And that's why there's a lot of microscopes. So you still can do R&D. It used to be better. So probably when you did this, it was a higher credit.
Zee, I'm telling you, the changes over the last couple of years, Zee, we were even speaking about it before.
Yeah, we're going to get on the budget, but they've been hit, haven't they? Because it used to be 130% tax credit, now it's
86%.
And you've got obviously the fun of doing the variation. Another one that you touched, and for the audience, Japanese knotweed.
Yes.
You've done a bit of a big job. How much did you save on this one?
Just shy of like 70, but £60,000.
So this is what they got back.
Yes.
Right. What happened on this one? Give an example so the audience know. Oh, look at this. Issues, my man.
No worries. So basically, they bought like probably around 3 acres of land. But what they were going to do was going to literally build a building on it. However, there's a lot of Japanese knotweed which was coming through the soil, and they tried to kind of get like herbicide to actually pesticide the actual plant. But what they were doing with it, because they were using herbicide, you actually have to inject the plant. However, if you can do that for, let's say, half an acre of land, it's going to take a lot of time and a lot of cost. So what they actually had to do was get a demolition company in to dig up the ground, to then relieve all of the Japanese knotweed and then respray all over again. Now, all of that cost in doing that over that period of time, they claim all of that money back.
How long was that? Over what time spell?
Over about 2 years.
So would they have to do it within the calendar 12 months? Would they have 2 sets of claims then?
Correct, there are 2 claims, yeah. So
because a lot of people don't realise timing is really important.
Correct.
Yeah?
Good segue, Zee. So in terms of land remediation relief, you can actually claim 3 years retrospectively.
Right, okay. Yeah. So if I do work over the last 3 years, can I claim all of that in the current year?
Correct.
Or do I have to go and adjust the tax returns in the previous year?
You're going to have to adjust the tax return in the previous year. However, as long as the cost is in that year, which you're claiming for, we can help you claim that back.
So you can go back and claim
3 years retrospectively.
So if I'm in this year, let's do calendar years for everyone in the audience. So I'm in 2024 as we speak now, and my year is January to end of December. I can go back the 3 previous years.
Correct.
And claim it from them?
Correct.
Would I have to amend those 3 years tax returns?
You're going to have to amend. You can still claim, but we're going to have to amend it because it has to be an amendment on this.
Because normally you can only go back
2 years, yeah.
From the year.
So from the tax return, 2 years, but retrospectively 3 years, depending on how it swings.
So am I getting this right, that I can go back more than 3 years?
No, so we can go, sorry, it's 2 years retrospectively from your actual tax return, because you can only
Got it. So that's why you got 3 years.
Correct,
right.
yeah.
So if I'm in 24, I can do 22, 23,
correct,
provided the year end doesn't pass.
100%.
Under the amendment
100%.
rules. Right, okay, so it's normal tax rules.
We got
That's amazing. Love it.
Yeah.
Hopefully I didn't confuse their people. The other bit I want to check quickly is derelict petrol stations.
Yes.
People got petrol tankers underground. I've had clients like this.
Yes.
How do you help them?
So we literally help them because in terms of derelict petrol stations, it's usually, they classify as like hydrocarbon, which a lot of the time some of the petrol literally seeps into the soil.
Wow.
Now this is contamination to human health as well as environmental as well as animals. Now HMRC seems this is a really, really big problem. So they really want to incentivize people who actually, let's say, purchasing acres of land who you're going to start building farms on it to really bring that back to a reasonable state.
Does this have to be in companies still as well?
Correct, yes.
So if they buy it in companies,
yes,
whether it's leaking or not, just by it being there because of the potential leaking.
100%. And it's going
because I've had clients where it's not allegedly not leaking, but go and have a petrol tank underneath your front.
And then also, they're going to have to, because of the petrol tank there, they're going to have to get specialists to see, okay,
I know
what's the contaminant, what level is that, how much is going to be a cause to the environment.
Wow.
And then based on that, then they're going to be kind of claiming land remediation relief.
I think there's so much potential. So you've got 2 major reliefs. You've got the R&D tax credits where there's innovation.
Correct.
Obviously get specialist advice. They work with your accountant tax advisor, because you need to have that expertise. There's a reports that you have to file. So your accountants normally won't be doing this these days, doing it unless they've got very specialist knowledge on this. Land remediation, also the relevant reports to back it all up.
HMRC says in terms of land remediation relief, you don't necessarily have to put a report together. You can literally just submit it via your corporation tax and do it as an amendment. However, as you know, with HMRC, the goalposts can be moving ever so often.
I think with all of these, a bit like another relief capital allowances, there's certain things they say you don't, but if they question, you've got to back it up.
Correct.
So you can't just say, oh, by the way, it's like the classic, you might hear this, by the way, I spent something on this, can I claim it? Oh, yeah, where's the proof, invoice, receipt? Oh, I haven't got that, but I did do it.
then you got no leg to stand on.
As I said, as good as a verbal contract, right?
Which means
so
none.
you need the report specialist to back it up. And also, if there's anything HMRC challenge, they know that you've taken professional advice.
Correct.
And that is one of the stats that people just do not understand. And unfortunately, there's people in my profession, i.e. being accountant tax advisors, more on the accountancy side, that they don't always fully enforce, and you've got to, because HMRC are, as the time we're speaking, more looking at more non-compliance than ever.
100%.
In a nice possible way, don't want to get upset them. And they're looking at challenging, and we've had these in different things. You've got to have the backup.
100%.
And otherwise, don't claim it.
Zee,
That's the way I look at it. Anyway.
Zee, I'm definitely with you 100%. And I think for us, we just look at it as claiming a research and development tax relief claim. We make sure we've got all the proof. We do a report. So HMRC exactly sees where's the contamination, how you've actually decontaminated it, the measures you've taken into doing that, what you have used, what you haven't used, the legislation in place. So then you kind of give them, you're always kind of giving a watertight claim, so HMRC can't really kind of combat you.
I love it, and apart from the blue part, see my marketing person Alfie sitting over there, he's loving all this. There's going to be huge knowledge, and we'll be sharing this everywhere. I've got to have some time for the budget, because time always goes so fast with us. For one thing, the budget actually was quite good for this, wasn't it? Tell us what they said about R&D tax credits in the budget.
See, over the next 5 years, HMRC will be giving £100 billion to R&D tax relief, which is amazing.
Wow, it is. I always a bit skeptical when it's these numbers. The reason being is, in real life, how much does that actually get claimed? It is not that number. They say the number, and even when people start claiming it, I know there was a bit of people not doing it correctly, but as soon as people claim it, they seem to not want it.
It's true.
It's a bit of a challenge balance. I understand why they're done, because some people were claiming stuff and we never forgotten is not making sense at all. And I'd be like, look, and to be honest, we lost some clients on that. We had to say to them, sorry, we're not going to be like that, because that doesn't stack up. I can't see the innovation.
Correct.
I can't see, where is it?
And you can't put anything forward that I'm not going to be willing to defend, or it's not going to stand up in terms of legislation. It affects our insurance.
100%. Because we do tax defences. I'm only going to do tax defences that I know that I can back up.
Correct.
And we are on the client side. We do not work for HMRC, to let you know, but we make sure they do it within the spirit of the law, and it actually stacks up that we can argue. So I think that's the balance.
Correct. See, and I think even just knowing that HMRC have put that budget for the next 5 years, it's huge, huge for property developers. Huge, because this is going to be, or this is a market where it hasn't been claimed to its full potential. A lot of property developers who are creating bespoke homes, bespoke buildings, or taking some of their pension or SAS and actually creating something new that they're not necessarily thinking you can actually claim this on. So it's huge.
Massive thing that Ishu just mentioned, SASs. SASs are quite good for funding perspectives. So in that case, when they're funding, so you can get the money funded, get into your business, have a limited company. The limited company then is doing the project as a developer and is doing innovation that meets certain criteria, and you get a double whammy because you've lent the money from the SAS. Let's not talk about inheritance tax at the moment, right? One of the things that I'm going to talk about also in the budget. You're a business owner. You've got to talk about employee national insurance. Sorry, but we do have to. That's going to impact you, I'm sure, when you look at the numbers, because you've got 9 staff members. You know, the couple of things you probably know, they've increased the rate. I think it's 9% if you think about it, because it's gone from 13.8 to 15%. I like how they say 1.2%, but that's not how it's done yet. It's not. It's a percentage increase, right? Which is hurting loads of people, and they've cut the level when it's going to happen. So previously it was about 9,100, it's 5,000. And then they've given a limit of 5,000, 10,500. So it actually affects a lot of people who've got part-time, or people who've got like working mums, or people got other This is just madness. It's absolute madness. So really, it's hurt the UK environment and the flexibility of UK businesses. I just don't understand where the growth is. Can you see the growth in that?
I can't see the growth, Zee. Can you see how's it impacting? Actually, question to you, how is it impacting you, would you say?
We're going to have to change the way we do stuff as a business, and as our clients. We're going to have to advise them, change their structure of how they take income out. Also, it's affected directors who are one man or one lady bands, which hasn't been taken into account,
Yeah.
because now they can only claim 5,000 tax-free, because before they could claim 9,000, which is about 700 and something pounds,
Yeah.
right? They can't do that no more. So they've actually dropped them because they don't get the employee allowance if they're one director. There's some planning around that, but these are the problems that it's done. And it's a step back. And I think a lot of the measures, in my opinion, step back. And we're going to look at one of the big ones to finish off all this fun. I had a lot of fun, but these are things. Business property relief. What that is IHT planning, inheritance tax planning, now is required for trading businesses. It was outside scope. If you are lucky enough, I think you're getting there to £1 million business, and everyone's aspirations. If you get to 1 million, now that's before they start charging tax. They're going to whack a 20% tax.
Correct.
And we were just talking about it. The details as we speak. This is November 2024, day before the old B day, right? Birthday, right? But
Not over day over 25, Zee.
Oh, thank you. Love this guy, don't you? And you can see why he builds relationships, right? But one of the challenges people will have is when the detail comes through is if they got a trading business with children and all this stuff, there's no spousal exemption between. There's only a husband and wife spousal. What? I assume they're not going to change that for this relief. What happens if the child or the parent passes away? Does that trigger the tax at that point? I think it does. That means the business is still going. You've got certain people just because of shareholding. How are they going to do it? How they're going to value what percentage and how that was done? I think it has not been thought through. I don't know if you've had any planning or discussions yet.
Do you know,
It's early days.
Do you know, I have that offline with you, Zee.
Yeah.
But in terms of the whole budget, for the autumn budget, for me, it's just a tax increase of what I've just seen.
It's a devastating tax increase. And we touched pensions earlier, and I know we're going to do that. For me, the pension side, oh my days. That is the biggest betrayal ever. I'm sorry, but Keir Starmer, Rachel Reeves, you betrayed the employer national insurance. That is national insurance. You said no national insurance increases. Went and done them. The other one is pensions. How bringing that into inheritance tax is a big step back, because we are supposed to be promoting people's wealth, i.e. their future, what they can rely on. Don't be a burden on the state, because we're getting rid of state pension. That's what's happening. And now they do privately, and you're going to sting them. After telling them for many years you're not going to do it. I think these are going to require people to think differently. And I know we were talking about it, but one of the things I'm seeing a lot of people, unfortunately, they are leaving the country. People, Zee's been like this. It's the truth. They're leaving to places like Dubai, because if you do it smartly and planning your private pension, you go to Dubai, apart from the nice sun and all that, help the old natural tan, right? You can potentially pay 0% tax. And you just got rid of IHT as well, because you will take it all out.
And I think we were talking about this before, Zee.
You're just taking money away from the economy, because people are not going to stay here. We should make UK a place that people want to stay here. They want to achieve what they want to achieve. And I'm very passionate about this. I hope it comes across.
It does come across, Zee.
I just think with the indications we're doing, and what we're doing is we're telling people, if you are successful, don't stay in the UK. That is not the country we've grown up in, and what the aspirations are. The aspirations of the UK have been always about how do we help people build wealth, right? Grow their business, be a success. There's no limit on success. We help that generational wealth, the legacies. We want more businesses because they pay taxes. They pay loads, corporation tax, income tax. I think I did a post on this. The tax burden in the UK, directly, indirectly, is between 70 to 90%. I think that's gone up.
Even corp tax has gone up to 25%. So we've already.
The highest rate is 26.5, because between 50 to 250, you pay 26.5 because you lose the 19 between 0 to 50. That's one. Income tax is the highest level ever. You also have a rate between 100 to 125 that you pay actually 62% because you lose your personal allowance. Anyone earning 100 grand above also loses the benefits or childcare and all this stuff. So actually the tax rate is surpassing 100%. People are stopped, and you're thinking 100 grand's a lot. It's not after tax. That's gross.
And even capital gains we're talking about as well.
I think there's a lot of challenges, and I think it's going to keep us busy. So if you need advice, help, good things to think about. Ish, we've covered so much value, and I know Alfie knows, and I know my other team member Anya will be loving this because so much content.
Do you know what, Zee? 50 minutes has gone like...
Do you know what? I think, to be honest, we're so on point. Normally it goes on, but Ish, you've been so succinct and to the point, and also highlighted the value. I hope the audience has seen the value if you get a good team of professionals behind you.
Correct.
To help you map out your long term. For me, I'm a bit biased, but your accountant tax advisor is your point of call, and then making sure they've got the network to be able to put all the different people. And that's where people like Ish and many others are so important, because they're specialists in that area. It's like going to your GP doctor. He will not be a heart specialist or brain surgeon.
True.
He would go and get the relevant people.
True.
If he doesn't or she doesn't, you'll be like, come on. You wouldn't expect them to just start operating on you, will you? So this is how tax works, as well, as you know. Listen, Ish, thank you so much for this.
Thank you, Zee. I appreciate you.
I hope you would enjoy the content. Please do like, comment and share this, and subscribe depending on where you're seeing us. And let us know if what other value you can add in. We're going to share this across all socials. It's always a privilege. Thank you for joining us for this Next Level Finance podcast, Series 2, Episode 5. Thank you. Hi everyone, I hope you've enjoyed this episode of the podcast. We're doing this to add value to your entrepreneur journey, which is have a quick catch up on this, is that just to remind you, we've got free business guides in the comments below. They got huge value in them for property investors, property developers, SaaS pensions, and if you've got growing trading business as well. If you, after you consume those guides that have got exclusive Sky TV episodes in them, please do get in contact with us. The contact details are there, and we can help shape your entrepreneur journey and unlock financial freedom. Thank you so much. Up.
Correct. And do you know what, Zee? Just so...
Blooper!
Sorry.
It's all right. Don't worry. Don't worry. It's all right. It's all right.